All right, so welcome to my YouTube channel where I come online to give my own view of the market, what I expect the market to do this week according to my own analysis. So I will kick off with the dollar index. So, but I don't trade the dollar index. The dollar index is to know how strong the dollar will be in the coming days or weeks. So let's start with the dollar index. So the dollar index, we have been on uptrend for a very long time. We have high, we have higher low, we have higher high. So and we are currently making higher low, maybe to give higher high, I don't know. So the dollar index, so as you can see, I have three major key level on the dollar index. So so I have the upper key level, I have the middle key level, and the lower key level. And also the market move from one zone to another, which means if the market breaks any key level, we expect the market to go to the next level, either to the upside or the downside. So and in the case of dollar index, as you can see, around June this year, the market breaks below the middle level, so which means the market is supposed to go to the next key level, which is around $19. So but we have been stalling in between $100 and $90. So all right, let's see what will happen in the coming week. So and also there's a trend line which might be preventing the dollar from going lower. So here's the trend line here. So this trend line have been preventing the dollar index from actually going lower to the downside. So yeah, we have the first touch here, second touch here, and the third touch around this region. So and ideally the market is supposed to after breaking this key level, the market is supposed to go to the next key level, which is $90, but the trend line is preventing the market from going lower. So which means we have to be very careful right now in the market because of this trend line, because this trend line can move this market up. So yeah, this is the monthly analysis. So and as you can see, the previous month, which was September, the market formed this indecision candle, which is this doji candle, which means the buyers are currently preventing the market from breaking below this trend line. So and this trend line is very dangerous. So let's go to the weekly time frame to see why this market is refusing to go lower as expected. So all right, okay, on the weekly time frame, let me check the month. Let me bring my trend line back to the weekly time frame. All right, as you can see on the weekly time frame, so this is the trend line coming from behind. This is the second touch of the trend line. So and at the third touch of this trend line, so after we broke below this middle key level, which is around $100, so the market, as expected, market is supposed to come to the lower key level, which is around $90, or the middle between $100 and $90, which is around $95, which is also a very strong zone. So but the trend line coming from the past is preventing the market from going lower. And also, if you check properly, the market is currently creating, I'm coming, sorry. So, and if you check very closely, the market is currently creating what we call the double bottom. This is the first bottom. We went up to come and test this key level. This key level is very powerful. So also we drop again to come and create a double bottom around this trend line region, which means the market is finding it difficult to break this trend line to the downside. So which means the market has officially formed what we call the double bottom, which is the first bottom here and the second bottom around somewhere here. So now, how do we apply this to know what to do in the coming week? Because the dollar index affects all dollar pair, Euro USD, EP USD, any pair that is related to the dollar index decide where the pair goes. So since we have analyzed that the market is finding it difficult to break the trend line, and this is the third touch of the trend line, and the market is currently forming double top at the trend line. So and sorry, double bottom, not double top, double bottom at the trend line area. So what we have to do now is to check how we can apply this to know what to do in the coming week. So let's check the daily time frame. So on the daily time frame, this is the double bottom, first bottom and the second bottom, while this is the trend line, also preventing the market from going lower. So that means we have two reasons of why the market is not going lower. So let me have this. So, and as you can see, after the market make the second bottom, to make it double bottom, we have been having series of higher highs and higher low, higher high, higher low, higher high and higher low around this region. So and also if you check properly, we have a very strong minor or sub key level around this region, which is we have a first touch here, we have touch here, touch here, touch here, touch here. This is a very strong resistance zone, and as you can see, anytime the market breaks above this resistance zone, we usually come to touch the 100, the major key level here. So and also if you check properly on this second leg of this DSY, the market has been making a series of higher highs and higher lows, which means I expect the dollar index to be strong in the coming week, starting from on Monday to Friday. I expect the market to break above, to give us higher high around this region. So I am expecting the market to give higher high around this $100 major level. So so that is my prediction on the DSY. Or the worst case that might happen, if the dollar index did not go above this minor level around here, So I expect the dollar index to also do this, to come and tap into this minor level here, and then go bullish again to or to at least give us a double top here. This one is the first top, to at least give us a double top, then to know, okay, if the market is at the double top, we can decide whether the market can break or remain here to also give a double top and drop again. But at the moment, the market is bullish, so let's expect the market to break above this minor resistance level, then maybe break, retest, and go higher. But if the market fail to break above this minor resistance level, the market can come lower. And if the market break this other support level right here, break below, then we expect the market to come out, tap here, and drop lower. But I am favoring the upside to the case of 80 to 90%, while downside 10%. So this is the DSY analysis. I'm expecting bullish on DSY. So the pairs I'll be looking forward to trade this week, starting from on Monday, is these two pair right here, which is the NZD, the New Zealand dollar, and the US dollar. So let's start from the monthly time frame on the NZD USD. So NZD USD, we have been quite bearish for some time, though the market has been ranging so much in the past few years. Since 2023, market has been ranging. It has been very, very difficult to trade for the past 2 years. So but the NZD USD analysis. So as you can see, I also have some key levels around this region. I have one here, which is the first key level here, middle level, and the lower key level. So, and in between my major levels, I have a minor level that help me to know where the market is going. So this is the minor level I have around this region. This is the minor level I have here. Let me show you guys. So this is the level I have here, around here. So around this region, this is the level I have. So, and if you check properly, anytime the market breaks below this minor level, we usually come to the major level. So when the market breaks below this minor level, we come here. When the market breaks below this minor level, we also come to the major level. And now currently on NZDUSD, the market has broken below the minor level, which means technically the market is expected or is supposed to come to this major level. So that is the monthly analysis, because this is the monthly analysis. We have a bearish engulfing here, and we also have the monthly bearish candle is very, very massive. So let's go to the weekly time frame. On the weekly time frame, this is the major, so this is the minor level we are talking about. So as you can see, the market has broken below this minor level. So we expect the market, or I expect the market to come and drop to this major level, or at least tap, or at least to this level, before the major level. So this is the breakout. Let me show you the breakout. This is the breakout. This is the first breakout, and the breakout confirmation was this second bearish engulfing candle, weekly engulfing candle. So which means the market is bearish. So you have to know that the market do not drop in a straight line. You do not expect the market to drop in a straight line, though it happens, but it is very, very rare. So the market moves in waves, which means if the market drop, we expect the market to range a bit, then continue dropping. So but the main thing to take here is that we have broken below this minor level, level. So which means the market is expected to fall to this level or this major level right here. So now how do I trade this market at the moment? So if we drop to the daily time frame, where I usually find entry daily and the 4 hours time frame. So on the daily time frame, after this breakout, we have this correctional move. You have this correctional move to the opposite direction. Then also then the market breaks below aggressively again, and also we are also experiencing another correctional move to go lower. So from a Monday, I expect the NZDUSD to be bearish, but how I will enter the market is based on the 4 hour time frame. So on the 4 hours time frame, if you check the previous correctional move to the downside, which is this one right here. So it started on Friday, September 26th to 7th of October, which is almost a week, which is almost like 8 days or so. And also we have been consolidating for like let's check from the daily time frame. So the market has been correcting for the past 1, 2, 3, 4, 5, 6, 7, 8, 9. For the past 9 days, so the market has been correcting. So, and for every move, there's always a correction. For every move to the downside, always a correction to give us another move downside. So, and also if we add our Fibonacci tool from swing high to swing low, you can see that the market has tapped into in between this 61.8 and the 50% level. So and also we also have a counter trend line forming on the 4 hour time frame. So this is the counter trend line forming on the 4 hour time frame. Sorry, this is my first video, so please bear with me on the sound and how I sound. So let's continue. And also please don't forget to subscribe, like, and leave a comment on your thoughts about my analysis and what you also expect the market to do this week. So let's continue. So this movement, so we have this counter trend line which is guiding us not to trade at the moment. So this trend line is our guide. So how will I trade NZDUSD? So I will only be selling NZDUSD if we break this counter trend line. If we break this counter trend line around here, so I don't know how long it will take. Maybe on Monday, Tuesday we might break out, I don't know. So if we break, so you see everything is lining up so nice. If we put our resistance here, so I will be trading NZDUSD to the downside if we break this counter trend line to the downside. So this will be my entry. If we break below, my stop above this eye or above this green bar right here, then my take profit will be down right here, while my first level target will be here. Then my second level target, my second TP will be, we use the feed to detect our second TP. So my second TP will be here, and my last TP will be down here. But ideally I expect the market to drop to this level right here, but I don't know when that will happen. But my my TP, my overall TP is at this level right here, which is around 1 to 4.5. Actually around 1 to 4.5. So let's see what the market do from on Monday. So I'll be watching this market very closely. I'll be watching this market very closely for the breakout. So let's watch and see when this market will break out. So NZDUSD to the downside, I'm favoring the downside to around 90% on NZDUSD, 90%. And you know, when the dollar index is going up, we expect the NZDUSD to come down. So it is inverse of the dollar index. So the last pair I'll be talking about is the USDCAD. So let's start from the monthly time frame. Sorry, my network is bad. All right, we are back. So on USDCAD, we have been putting a series of higher highs and higher lows. So honestly, I was expecting the USDCAD to drop to this major level right here, but the market failed to do so. So now if you check closely, we have rested at this level right here, and also we have broken above this major key level, which means, you know, I said before, if you break any key level, we expect the market to go to the next key level right here. So on USDCAD, all right, so USDCAD, sorry, my network was bad a little bit. So on USDCAD, the monthly time frame is currently bullish. So let's check the weekly time frame to know what to expect this coming week. So on the weekly time frame, I have some drawings. So okay. So on the weekly time frame, so this was the support that the market moved from. So you have the support right here, and also I am kind of seeing an inverse and head and shoulder pattern where the left shoulder, and we have the head and also the right shoulder right here, and we are trading above right now. So what I expect the USDCAD to do in this new week is since we are already traded above this major level right here, and we have broken above this major resistance zone. So and okay, let's check the daily time frame to see more details about the market. So this is what I was talking about. So this is the left shoulder, the neckline right here. This major zone here is kind of fake out. Then we have the head here. We have the second shoulder right here, and we have broke above the neckline, which is around this major level. This major level is the neckline. This breakout is a fake out. So this is the neckline right here. So what I expect the market to do, so I expect the market to come and tap into this major level to retest the neckline. I expect the market to tap into this major level to retest this neckline and move to the upside to continue the uptrend. That is what I expect the market to do, to break this minor trend line here. This trend line is a fake trend line. Do not buy from this trend line. Wait for a pullback to this neckline and major level. Either wait for a daily bullish engulfing, because I have lost so many trades based on how will I say it, based on immature entry. So I have two entry model. Sorry, I've not shared that here. I have two entry model. So we wait for a pullback to this major level, then you find your entry from this major level to the upside. So first level target will be the 100% retracement, then the second target, this green bar, then so onto the upside. So what is our analysis on USDCAD? So we have left shoulder, head, right shoulder. We have broken above the neckline. So what do we expect market to do to come and tap into this neckline, and if possible make the third touch of the trend line? So what is our confidence for the buy? Number one is we have support. Number two, we have chart pattern. Number three, we have trend line. Then number four, confluence is if we add this Fibonacci, our Fib level. So this is our four buying confluence that I have for USDCAD. We have the support one, chart pattern, inverse head and shoulder pattern, then trend line, which is this first or second touch. Maybe we can come and add the third touch around this level right here, and the number four confluence is our Fib level. So if we take our Fib 2 from swing low to swing high, you can see that our Fib level match with our major support level. So if the market come below and tap into our major level, so we have 4 buying confluence on USDCAD. So what our advice is, we'll wait for a pullback into this major level. Wait for a pullback into this major level before you start, or before I start. I will wait for a pullback to this major level before I start looking for a buying opportunity. Because if you buy right now, if you buy USDCAD right now, it means you are buying in no man's land. You are buying in between, like in nowhere. So wait for the market to pull back to a major level before you look for a buy, or before I look for a buy. My first level target is this is the previous high. My second level target, or my main target, is the this green bar right here. So that is my this is my analysis for this coming week. So this is the 2 pair I'm trading this, or I will be trading this week, which is the NZDUSD for sell, and also the USDCAD for buy. So what is like my confidence in this trade is the dollar index, because the dollar index is currently bullish. So which means if the dollar index continue to be bullish to the upside, I will have a trade this week. So let's see what the market do this week. And thank you for watching my YouTube video. Please don't forget to like, subscribe, and also share. Share your thoughts on the comment section. I'll be looking forward to read all the comments, and also reply to anyone if it is very, very important. So thank you. You are welcome.